as the SGX indicated, closer to 10,820.
We have the Nifty, which is up around 30-odd points. We have the Sensex, which is up around 83-odd points. And the Bank Nifty not doing too badly, so up around 0.3 or 0.4%.
It's the mid-cap index. So look at that. It's a 320-point rally. It's nearly 2% in terms of an up move.
Stunning day it's been, and today is the one day where the markets rewarded you for following just the basic premise of buying that dip and just ignoring the noise. Greed and fear. Right? 2 weeks back, it was all about fear. Today, it's all about greed. Times will change once again. You know, there will be fear once again.
Dalal Street starts the week with stellar gains. Sensex and Nifty add over 1% each. Nifty closes just a few points shy of 11,000.
The mid-cap index surges over 2%, outperforming the frontline indices. Small caps also rallied 3%. Repco, Home, Edelweiss and Graphite are some of the top performers.
Auto stocks zoom ahead despite disappointing February auto sales. The Federation of Automobile Dealers Association says dealers are stuck with 2 months of inventories for two-wheelers and 45 days for passenger vehicles.
Tata Motors is the big gainer of the day. The stock rallies 8% after posting inline sales numbers for February. ITC also gains 2% after sources tell cnbc TV 18 that the company may have hiked product prices.
National Housing Bank proposes to hike capital adequacy ratio and reduce borrowing limits for housing finance companies over the next 3 years. Calls for industry's response to its proposals by March 31. Sources also tell cnbc TV 18 more changes are in the anvil. Well, those were the top 5 headlines from Dalal Street on a day when the bulls had it, the bulls had it, and the bulls had it. This is Market Today Talkback, the show where we will tell you everything that happened in those 6 delirious hours in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant, what a day.
What a day, Lata. And the great thing, I think, was the fact that it was a slow, steady move up, right? I mean, it was not a 150-point gap up and then the market gaining another 20, 30 points or so. We've had those days as well. But today, actually, the market opened, it slipped, to the day's low. And from there, it slowly moved up. And of course, the pace picked up post-lunch, but it did pick up, and how. Over the next 30 minutes, we will talk about how the market fared, the top stories, and of course, we'll have our guests answer the questions you send us as well. And to answer your questions, we have Mayuresh Joshi, and on the charts, we have Mitesh Thakkar. Devin Choksi of KR Choksi is also with us on the phone line. Gentlemen, all of you, thanks very much. And thank you for being with us here today on this 122 up day on the Nifty. But as always, let's spend 2 minutes, take a look at what really happened right from the word go. Nata.
Well, I can only describe what happened. The market didn't give us reasons. We know it's a 1%, 125-point gain on the Nifty. It's a 375-point gain on the Sensex, a 2.5% gain on the mid-caps, and almost a 2% gain on the Nifty Bank as well. I think the advanced declines tell you the story. 6 in the green for 1 in the red, which means over 90% of the stocks are higher than where we left them on Friday. And Friday was a fairly damn decent rally, actually. So it's been a very good going for the mid-cap index. The mid-cap index actually, I think, would be up about 8.5% year to date, or actually in the last 2 weeks itself. Most of the recovery coming in the last 2 weeks. So it's a solid rally, you will have to say. Okay, I can look for reasons. Probably a more assured return that the current government will win the next elections. Or you can say crude has weakened and is now moving towards 65. The reasons come afterwards. The short point that Prashant was telling you, you could have bought at any point in the morning and you would have made money. Now, that's something, it's a bull's dream today. You want to add more names to this rally?
Absolutely, Lata. Lots and lots of names, really. Mid-caps and small-cap, the indices will come up on your screen first. From the recent lows, the mid-cap and small-cap indices are up anything between 8 and 10%. When I say recent, 10 days, 2 weeks or so, right? So this is pretty large. Okay, Nifty stocks first up. Indiabulls Housing, big one. Axis Bank, ICICI Bank, on your screen. So lots of financials there. Let's come to autos now. Eicher, Tata Motors, Hero. There was Maruti, which was up 2.5% as well, but I'm just limiting to 3. Eicher 8%, Tata Motors 8%, Hero 4.5%. Oil and gas next, HP, IOC, BP, even upstream companies like ONGC on your screen, a big one. So this is where a bulk of the activity was concentrated. And now we come to the broader market where, I mean, it's a long list. So, just a sample, Nagarjuna Construction, Graphite, we had Delhi Buildcon, which was up 16%. BEML, Repco, we spoke with the management earlier in the day, 22%. Again, I mean, actually, by far the biggest gainer today. IDFC First Bank, 7.5%. You look at Edelweiss, more financials, Edelweiss, Equitas, Ujjivan coming up. And, I mean, through and through, very large volumes across the board. There was more PNB, which continues from the rally last week. Muthoot Finance, L&T Finance, 6%. And then you come to others, Philips Carbon, Lakshmi Villas, Rain Industries, Shriram Transport, Steel Authority of India, Nalco. I mean, the list is really a long one, and I'm not even bothering with stocks which were down. There were a few, I mean, but on a day like this, really, who cares? Lata.
I am going to tell you a couple of those. Wipro, Tech Mahindra, all IT names, and that's because the dollar costs all of 70 rupees 49 pies. I mean, that's the big reason. Their dollars is not going to fetch as much money as it fetched last week when people were worrying more about possibilities of war. So that kept the IT stocks on the back foot. It also brought down yields. And, you know, last week, again, because of all the border tension, you saw yields going, the 10-year yield going well past almost 7.7, you know, 7.68 on a stray day. Today, it was 7.55. So, you know, we're seeing both crude and the easing of tensions having its impact on a lot of macros. But all this is post-rally justification. In the morning, nobody smelt, nobody told us that we're going to get a giant 6:1 kind of advanced declines ratio. We were clearly not prepared for this kind of a momentous rally. So let's find out what our guests have to make of the markets going forward. First up, Ashwini Gujral, what's your sense? Okay, sorry. I'm really sorry. Mitesh, what are you making of the markets today? Are you, I mean, have you taken home bullish bets actually?
Good morning, Lata. We have. See, despite the fact that we have kind of closed at a level where Nifty has time and again kind of found resistance, you know, what is possibly a chance of making a difference this time is that most of the trend indicators or volatility indicators were flat, but with today's move, they've started inching on the upside, suggesting that there could be a positive directional bias or volatility happening in the markets. The first target would be close to about 11,050, which was the gap level when we started falling in February. And in case we overcome that, then I think I'm looking at 11,250 or thereabouts as the possible target zone.
Okay, you would be more bullish on the Nifty Bank?
I would be equally bullish. Both stocks, both the indices, are looking pretty good to me. Bank Nifty has also broken out of a contracting pattern with upside expansion. I think the target should be close to about 27,720, which was the recent highs in January, and we are only about 200 points away from that. And once we break about that, I think then 28,000 should happen on the upside. So I think both these indices are suggesting another 3-4% kind of an upward traction happening over the next few days.
Devin Choksi is also with us. Devin, first up, to your mind, was there a clear driver for this rally that we are seeing? I mean, is there a clear driver?
Yes, Prashant, I think we have been putting this point across that the pre-election rally has to start, and I think this is what we were expecting. Fortunately, I think this Bagakot attack has basically helped in creating a perception or the confidence in the market players that this government will come back into the power again. So that is possibly, I think, leading to the surge. We have seen the inflow of money coming from the ETF side, particularly in the last week, wherein I think good amount of liquidity got created in the system once again. So that is being seen as a positive. And all the more put together a few things, that some of the stocks have been systematically, I think, been brought down, or the valuations were available at a significantly lower levels. All in all put together, I think, invited this kind of a rally, I would say so. Though I think one would definitely find surprises that on a given day I did not get notice for the market to rally. But I think they were all the symptoms which were in making for a rally to come in.
Would you buy now, like today or tomorrow when the markets open, in terms of an investment buy? And what would you buy? Would they be in the mid caps? If yes, which sectors?
Lata, we have been selective buyers all along. I think even in the fall, we have been buyers in the market. And our conviction is high in some of the companies where the fundamentals are strong. We have the list in
Such
form
as?
of some of the life insurance companies we are very convinced about, wherein I think likes of HDFCs and Bajaj Finserv kind of players who have been showing reasonably good amount of growth momentum in their businesses. We like the auto companies in Bajaj Auto, Ashok Leyland kind of companies where we see the numbers supporting them too. We also like some of the mid-cap companies like Starlight Technologies, UPL. I think though it can be called as a mid-cap, but I think still we like these kind of companies from investment point of view. So yes, I think selective list of the companies where we feel confident about the business and the company's performance going forward. We have been buyers in this market. So any corrective fall or otherwise too, I think when the valuations are attractive, one would like to buy into them.
Okay, that means there is still some rally left, both from our fundamental expert and our technical expert. There's a little more left. We will have more stock-specific questions for Mayuresh, but for the moment, the second headline.
Absolutely. Mid-caps and small-caps rallied hard in trade, outperforming frontline indices. The mid-cap index up 2%, and the small-cap index ending the day 3% in the green. On your screen, actually, I mean, almost 4% in the green.
Meanwhile?
Well, Repco Home, Edelweiss, the stocks which should come up on your screen, and Graphite were the top gainers as far as the gainers are concerned. I guess viewers, Lata, will have lots of questions on
Oh, yes, we have a bunch of them. And let's pick the first one. This is Deepak Nair. He has written to us from Bangalore with a question on Graphite India. It used to be one of those stocks that almost bounded from high to high all of 2017. What he wants to know is the right time to buy some 200 shares of the company. Graphite India, is that a stock you look at, Mayuresh? You have a view?
Evening, Lata. No, so clearly I think the stock had performed very, very well before it went into a downturn. But 2-3 important aspects to be seen. A, I think how the utilization levels pan out for the company as a whole. Secondly, I think needle coke prices, I think how this pricing moves around is clearly going to affect the operating performance. And both these factors are probably going to create an effect in terms of how the EBITDA and the bottom line performs. So I think there are some elements in terms of how the earnings growth might move. There might be some curtailment in terms of the EBITDA margins because of a shortage of needle coke or prices moving higher. So in my opinion, I think I am looking at other stocks. Financials is what I'm looking at this point of time. I think gold financing companies is something that I've been liking for a period of time, or even the private banks. I think there is ample scope even there over the next 1.5 to 2 years.
If Deepak wants to know, will you buy that stock?
So not at this point of time,
Okay.
as I said. I think I'm better off looking at private financials or the gold finance companies on declines.
Fair point. Okay, Graphite today, of course, had a roaring rally of 10%. Mitesh, if Deepak only wants Graphite India, is it a time to buy?
So, Lata, I think, what the stock has done is after correcting from 1100 levels as low as to about 400 levels, is now giving signs of a bottoming formation and a reversal in the short to medium term. So, from a trading point of view, yes, I would agree with the buy decision, maybe not from the longer term charts point of view. I think these are good levels to enter. Keep a stop loss below 440. And I think on the upside, 550, 560 zones could be tested, giving you about 1:5 kind of a risk-reward equation.
Okay, so it's more like a short-term strategy you're recommending, Mitesh?
That's right.
Okay.
So about a few weeks.
Okay. Well, Deepak Nair, if you're listening, it's a short-term buy that Mitesh is recommending, and Mayuresh believes you are better off buying the financials.
Well, we move on to the third story of the day then. Auto stocks did well despite disappointing February auto sales numbers. Remember, Eicher had reported weak numbers with Royal Enfield sales down 14% on a year-on-year basis. Hero MotoCorp also posted a 2% fall in sales compared to last year. On the other hand, TVS Motors saw an increase of 3% in sales on a yearly basis. Let's listen in to Manish Singhania of the Federation of Automobile Dealers Association, who says that dealers are stuck with unsold inventory. I mean, one of the big reasons why wholesale volumes aren't really picking up. Listen in.
The inventory has gone up to more than 2 months. And in some geographies, it is reported to be around 75 days. And passenger vehicle stocks, that the inventory is now up to minimum 50 days that we can say. Commercial vehicles, paid-up stock has increased to 45 days. So whatever correction that we had in the month of December and in January, that is gone, totally gone.
Okay. Actually, there are more questions on this issue than perhaps on any others because autos have been an attractive buy. And there are people who have told us that you should buy the distress. So here's one question on that. Hitesh Joshi from Pune has written with a question on Hero MotoCorp. He's been holding 20 shares of the company at 2,600 rupees a share, says he's a long-term investor and he wants to know if he should hold or sell. 20 shares of Hero Moto at 2,600 rupees. Mayuresh, what would your advice be to this gentleman?
No, so Lata, I think if he has a long-term view, he should clearly hold on. Yes, I think the two-wheeler stocks are going through painful times. There is inventory levels in the system which has built up significantly. And they also witnessed insurance costs moving up, input costs moving higher. But there will be, over the next few weeks and months, normalization that will probably happen in the system. And as that happens, and what we've probably seen, at least at the entry level, because of Bajaj Auto, I think prices getting cut, you're probably seeing Hero MotoCorp evolve more as a rural story, which always has been the case. So if there are better monsoons, if you're expecting discretionary spending patterns to probably stabilize, I think the volume should hold up over the next few quarters. Though I think the pain might last over the next few weeks till volume normalize and the inventory probably gets out of the system. So if he has a long-term view, I think hold is a call that I would suggest.
Okay. Well, thanks for that advice. A very quick technical trade on Hero Moto, Mitesh?
I would also suggest a hold, Lata. I think the stock, the longer-term charts are not very appealing. But again, I think having seen the stock correct from 4,000 levels to 2,600 levels, we are also looking at some kind of at least a short-term trading rally. The target should be 2950 to begin with, but there's a realistic chance that if he holds for a few months, I think the stock can head towards 3,300. Maybe that could be a good exit point, or he can take a fresh opinion over there. But that could be about 3 to 4 months away from here.
Okay, but that's a good gain. 3,300, that's about 500 rupees. That's what 20% that he can make in 4 months if that were to happen. The mood in which the market is, it looks like it may give you these gains, especially if it's a beaten down stock. Okay, now let's come to the big global headline of the day. It's a somber one. China has lowered its growth target for 2019 to 6 to 6.5%. This announcement was made earlier today by the country's Premier Li Keqiang at the opening of the country's annual parliamentary meeting. That's the National People's Congress. The Chinese Premier also warned of greater risks ahead for the country's second largest economy.
Asian markets, although ended mixed. Shanghai ended close to 1% in the green, while Japan's Nikkei slipped close to about 0.5%. Hang Seng ended the day absolutely flat.
So quite clearly, people expecting that maybe some fiscal stimuli might come, despite a somber address to the National People's Congress by the Premier.
And I think a lot of the problems are known. I mean, if you look at the stock market, the Chinese stock market is actually turning. I mean, it's actually starting to move higher. The case may be discounting. We take a very quick break here, but first a market opinion that we got from Motilal Oswal's Rajat Rajgaria earlier in the day. He says there are finally some positive cues to look forward to in the market. Listen in. We are back with more stories and more questions.
If you look at the multitude of factors which have impacted the markets, some of them are turning positive. But I also wanted to highlight here that for the broader markets, if you break the Nifty into top 15 and next 35 stocks, the top 15 are trading as if the Nifty is at 12,500. And I'm not making a guess, these are numbers that we compute based on the stock prices. And the next 35 stocks are trading as if the Nifty is trading at 9,000 index. So you can see how big the deviation has been within the Nifty 15 and Nifty 35 names.
With us, they've been taking the questions that you're sending us, and we continue to pose the questions to them. We are through with 3 of the top 5 headlines that we put out for you every day. So we move on to the 4th story of today. Stocks and news. Tata Motors was the big gainer of the day. The stock rallied 8% after the company posted in-line sales numbers for February. ITC also gained 2% after sources told CNBC TV 18 that the company may have hiked prices of some products. So let's focus on ITC. Mangalam is here. He broke that story. Mangalam, over to you.
Well, this morning I was speaking to a couple of cigarette dealers who said that the new stock that came in from ITC, especially the Bristol, Flake XL and Capstan cigarettes, the stocks of which are awaited, bore higher prices. On that, I spoke to the company, and my company's sources, on condition of anonymity, did confirm that yes, there was a price hike on Bristol, Flake XL as well as Capstan cigarettes to the tune of 7 to 15%. 7% price hike on Bristol, close to around 11% on Flake XL, where the prices have been increased from 54 rupees a pack to 60 rupees a pack, and Capstan, the stocks of which will be dispatched today, have borne a price which is higher by 14.5%, from 48 rupees a pack. The cigarettes will now be selling at 55 rupees a pack. These three brands for ITC comprise about 20% of the company's cigarette volumes, and this price hike comes after the company had taken a price hike in December to the tune of 10% on 10% of the company's portfolio. So in a sense, over the last 4 months, the company has taken a price hike on nearly a third of its cigarette portfolio, and all these price hikes are non-tax related, which means that this would be a boost for ITC's earnings before interest and tax going forward. If you remember, the third quarter, it was the ITC cigarette EBIT, the margins out there were a bit of a disappointment, which caused the stock to underperform a little bit. But, however, the company has been taking calibrated price hikes on its cigarette portfolio. Over the last 4 months, a third of the cigarette portfolio has seen some price hikes.
Okay, thank you very much for that, Mangalam. And the question actually is not on ITC. The question is on the other stock we mentioned in the headline, Tata Motors. Mohammad Gauss from Kolkata has written with a question on Tata Motors, says he's been holding 12,500 shares almost, and the purchase price is 540. Oh no, oh no. What should he do? Mayuresh?
No, Lata, so I think he unfortunately has to hold on for a longer period of time. What you probably saw in the numbers were a little bit encouraging, but I think the biggest market, which is the high margin market, the Chinese market, is still showing signs of softness. The Indian markets and the domestic MHCV stroke LCV market and the PV market is holding up. But the contribution to EBIT and EBITDA is far lesser than what JLR probably posts. Again, the kind of impairments that they've taken and the hit on cash flows can probably ensure or probably curtail the kind of earnings growth or the momentum that the stock has. So unless he gives a long period of time, I think he probably needs to have that much amount of patience, Lata.
I know, very unfortunate. People who buy should perhaps have stop losses. Fifth and the last headline for the day. It's a CNBC TV, an exclusive. We learned from a government official that the National Housing Bank has proposed to hike capital adequacy ratio and reduce borrowing limits for housing finance companies over the next 3 years. The NHB has called for the industry's response by 31st March to its proposals. Abhishek Kothari here to decode that for us.
NHB has proposed certain changes or regulations into the HFC sector. So the first one is to hike capital adequacy ratio by 1% every year till 2022 to 15% from 12% currently. This can lead to negative impact on LIC Housing Finance and PNB Housing Finance, whose capital adequacy ratio right now is less than 15%. The other implementation that they seek is that the overall HFC borrowing to be capped at 12x of the net worth, and the overall deposits to be capped at around 3x of the net worth. So as on date, all HFCs actually comply with both the regulations, with SDFC and Repco having the lowest leverage in the HFC sector with respect to borrowings as on their net worth, while the highest leverage is for LIC Housing Finance and PNB Housing Finance. Therefore, they would need capital for their growth ahead. So therefore, if the new rules are implemented, it is positive for Repco Home Finance, while it is negative for LIC Housing and PNB Housing. Back to you.
Abhishek, thank you very much for that. We spoke with the Vice Chairman and CEO of HDFC, Keki Mistry, who says that the new norms will have no impact on the company, HDFC that is. Listen in.
The overall, something like this was expected after the IL&FS crisis, because we did expect that NHB or RBI for NPSCs and NHB for housing finance companies could look at restricting the amount of borrowing that could be done in the market and maybe even increasing the capital adequacy ratio. How does it affect HDFC? It doesn't affect HDFC even one bit.
Okay, doesn't affect even one bit, and a marginal impact on LIC Housing and I think GIC housing, as Abhishek was explaining. But even over there, they have 3 years to reach 15%, and their tier 1 is 14.5. I mean, it's not very difficult to raise tier 2 bonds, I would think. But that leaves us with no time for questions. Mitesh, Mayuresh, thank you very much for joining us and taking questions of our viewers. And that's it on this edition of Markets Day.